Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our Forex market analysis. So on weekend, we were focused on very strong support area as on euro currency, as on Great British pound, as you will see it a bit later, as we decided to pay more attention this year to the Great British pound because with the fundamental background that now stands United Kingdom. We talked about this in a weekend, dedicated a lot of time to this subject. It seems that United Kingdom might become a really big driver of the crisis events in the global finances in a row with the Japan, together with the Japan. So this definitely makes sense to keep an eye on what's going on in Great Britain. So, and that's why on Forex market, the cable now it's also will be our special, in a special attention. Well, logic here is simple. Markets stand technical and very strong support. Maybe from the fundamental point of view, in really big picture, it doesn't matter just because maybe this level, well, will not be able to break the overall tendency that is driven by actually big fundamental events. And technical issues hardly will break the trend. But for us, in the short term, it might be really important, and because so strong level almost always triggers tactical response, tactical pullback on the market, which is might be not really very small on the daily chart because the level stands on the monthly, and even tactical minor pullback on the daily, it could provide lots of trading opportunities in the short term. So in fact, we already have talked about this, and we're trying to consider entry on the long side last week, but at this point nothing has been formed, and today we could get another opportunity to start watching. Maybe we'll get some bullish reversal signs, and now we will get the chance, because here's a few moments to consider. First of all, on the daily chart, market finally has completed the XOP target and stands very close to the oversold. If you will take a look at the Great British pound, you will see that market is at oversold and also has completed this XOP. So that is what we have on Great British pound. XOP completed. I don't have the oscillator predictor here, but I just have checked a few minutes ago, and market indeed stands at oversold. So market stands simultaneously at oversold and at target, which is background for Kiss Goodbye trade. It's calling it John Napoli Kiwi trade, suggesting at least a pullback. Here I would also consider larger scale ABCD pattern on the cable with the target around 118.60, but that is a bit for a more extended perspective. What else we could say on the Great British pound? So if on the euro currency we do know that 102 is a strong monthly 618 support, the 122 area where market stands right now, and also very strong FIB support on the monthly chart, but this is 30% support. So you can see that the Great British pound is a bit lagged to euro currency. So if euro currency stands already here, Great British pound stands right here. So that's why it will have to catch it up and just keep going faster to the euro currency to catch it. It's just, of course, joking. So anyway, this is also very strong support where a pullback is also possible. And here I also would like you to remind this picture that we have considered previously, and we're speaking a lot about 122 area. Here we have done a few trades. If you remember the long trade we did here. So now it's once again market is coming back to this level, which is historically very important since 2016. As you can see, long-lasting support. Only here it was the downside breakout in the moment where the special military operation started and the market collapsed. So if this level will be broken, next one will be 115.30. Now, in the cross-market analysis, also some background exists for the possible retracement. All markets have reached very important levels. For instance, 10-year bonds reached 4.8. Here is still unclear what direction will be, but you can see that some minor pullback stands on the market in 10-year yields. On the dollar index, market hits 110 area, right there. Long historical, very important level. So here's also some signs of the response we start getting here. It's also market probably here is at, not quite at the overbought, but very close in the same manner as the euro currency. So from that standpoint of view, in all markets exist some reasons for possible retracement. Now on the full time frame chart, if you remember last time when we talked about possible position taking, it was right here. And the market has shown the wash and rinse in the beginning of last week. But the market hasn't formed anything. So and hasn't formed any chances to consider taking a long position. For now, situation stands a bit better. So you can see market now shows pullback with all the reasons that we just have discussed. Also, we've got here some bullish divergence. And that's, well, another chance that we intend to consider. In fact, if you're, well, how to say it better, not hurry up too much, but if you're actually prefer the aggressive way of the trading, taking a bit more risk and ready to take more risk with getting the a bit better entry price, theoretically you already could consider taking the position with this pullback. Invalidation point will be right at these lows with this pullback, because here you could recognize some patterns. On the hourly chart you could see kind of the hand and shoulders or something. If you drop to the 15-minute chart you probably could see it better. We suggest that in the nearest few hours we still could get a kind of the ABCD pattern to the major 50% support one on 227. Well, because this is actually first response after very long-term downside action, and usually when the market shows first pullback, if even it prepares to show significant upward retracement, in the first stage it shows deeper retracement because the previous bearish momentum is still strong here. And from that standpoint we think that we could consider this level for possible entry. Besides, it will be, well, better level with the less risks and save some money with the position taking. But this is still will be a bit aggressive because in fact we do not have any patterns. Now yes, this will might be some kind of the garbage triple to buy, but it will not be the hand shorts, it will not be some big reversal pattern still. So this choice is up to you whether you would like to take part right in this beginning of the possible trading setup, or you prefer to wait for a bit more confirmation. What the more confirmation might be. So once again, it might be kind of larger hand and shoulders. If this hand shoulders fails, we could get still 127 hand shoulders right here, right? So it might be first starting some upward action here, then it might be pullbacks, more extended response. Don't forget that we are at monthly support. And in general, on the way to the upside, it also might be multiple trading stops might be formed that could let us to step in a few times. So depending on your risk sensitivity, you could, well, not hurry up right here and comfortably just watching what will happen and choose the moment that will be perfect mentally to your trading style, for your personality in general. But as I said, for aggressive traders, currently also could consider it takes a bit more risk, because here's maybe some wobbling action, maybe some pullbacks, retesting on the lows, so risk's a bit greater, but theoretically it is still possible. So that in towards what we have currently on the euro currency, by taking a look at lower time frames on the Great British pound, the situation here is very similar. So the same response here stands. So in fact, we could use absolutely the same conclusions for position taken on the British pound. The only difference with the euro currency is the difference in level, in scale of the level. Here we have the 30% monthly support. On the euro currency we have a 618 major FIB support. All other things very similar, especially on the lower time frames. On the higher time frames they are a bit different, but on the lower time frames, in overall background, mostly the same. The reasons for the pullback absolutely the same, although the situation fundamentally is very heavy as in the European Union, as in the United Kingdom. So that in towards what we have. Let's just consider what will happen. And today, just as a bottom line, we're still watching for 1 or 2.27 fib support.